What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here. And yesterday, we saw one of the largest stock drops ever because of the inflation report that pretty much, I guess, shocked most of Wall Street and investors. Remember that about 50% of Americans go into retirement with IRAs, 401ks, and pensions that invest in the stock market. Unfortunately, the other 50% of Americans go into retirement with only Social Security. And then there's millions and millions of people as well that also have money in the market. And this is also because of the interest rates. The Fed might be having one of the largest interest rate hikes here ever going forward. As if we haven't had enough interest rate hikes already, we could be having even more and one of the largest ever. Check this out. Also in this video, we're going to talk about a major date here coming on September 21st, which is going to be a very important date to watch here for millions of Americans and pretty much all of America here. So stay tuned in this video. Yeah, so you can see here, U.S. stocks just suffered their biggest one-day decline since June of 2020. Here's why an inflation surprise tanked the market. So the stock market was actually up the day before, and the inflation reports spooked the market yet again. The Dow Jones Industrial, which is kind of a index of the stock market, plummeted nearly 1,300 points on the August inflation news in the worst day since June of 2020. All the way back from the height of the pandemic when the stock market was really crashing. That's how big of a day it was. The Dow Jones Industrial Average plunged 1,276 points for about a 4% decline. The S&P 500 dropped 4.3%, and the NASDAQ fell 5.1%. So the Dow Jones falling 1,276 points is on the largest daily point losses ever in the history of the Dow. In fact, it's the 7th largest point drop ever. And in fact, when we look at the top 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All 10 of them have happened since 2018. Yeah, that's how volatile it has been here lately. But even with that being said, in fact, so that was 1,276 points. The top 3 were all over 2,000 points. The number 1 was actually like negative 3,000 points back in March of 2020 here. You can see all 3 of these were March of 2020. But even with that being said, all these in March of 2020, here's a 5-year span, including March of 2020 when this all happened. All of that being said, a 5-year span of March of 2020, including the Dow here, this is Dow Jones, which basically, it's like 30-some stocks here that kind of gauges the market. All this, the stock market's still positive throughout all this. So all these kind of ups and downs and all these scary moments, if your 401k, your IRA, your pension, if you just held on and didn't panic through all these kind of ups and downs, this was kind of good things to hear, right? If you didn't sell along every tiny little panic moment along the way, you'd still be up roughly around 40%. Okay? So this is kind of like, you got to remember that investing is not a sell at every kind of little panic moment along the way, at least for my investment strategy. Okay? If you're saving for retirement, you're not selling on every little downturn. It's just kind of how it is. 5 years ago, the Dow was at 22,000. Now it's at 31,000. In fact, just on August 8th, it was at almost 34,000. So just a month ago, it was at 30, almost 34,000. Okay, so if we went from 22,000 to 34,000, that's not a bad return. Not a bad return. And if you look at a 20-year horizon here, I'm sorry, a 30-year horizon, which is something you might save money for 30 years for um, your pension, or I'm sorry, for retirement, right? Through your pension and through your 401k, through your IRA, where you put money in, every couple paychecks, every paycheck, every two paychecks, to save for retirement, your 401k, something like that, right? You put a little bit of money in every single paycheck. 30 years ago, the Dow was at 3,200, the index, right? Now it's at 32,000, 31,000. So it's gone up 10 times. Okay. So that means if you had $10,000 in there, now it's worth 100,000. If you had $100,000 in there, now it's worth $1 million. That's kind of how your money grows over time. All you had to do was just not panic and sell at every little down dip along the way. You don't sell at the low. You just if anything, you just keep putting money in along the way through your normal paychecks if you're still in the accumulating phase. Again, you just got to hear this stuff, because if you always think the sky's falling when it comes to investing, your money will never grow, if that kind of makes sense. But it's just because I've been in that game for a long time. I've just kind of lived through it all. We lived through 2020, right? 2020 was a much harder time investing wise. The sky was literally falling, right? Investors have begun pricing in odds of a 100 basis point rate hike, which would be a full percentage point of interest rate hikes here at the next Fed meeting. A hotter than expected inflation report. Wow. Which is coming September 21st. You can see here, this is coming September 21st. This is going to be a big date for everybody to watch here. The Fed tool shows a 20% chance of a big rate hike on the September 20 and 21st meeting. So we could see an actual 100 basis point rate hike, or a full 1% raise of interest rate hikes. Previously, we were thinking maybe it might be half that, of 0.5%. Now it could be as high as a full 1%. And this comes after the Fed has already raised interest rates multiple times before this. Multiple times. 0.75, 0.75, two times before this. I think they've raised the interest rates like 4 times now this year. 1.5% here just in the last 60 days. And now they could raise interest rates as high as a full 1% now, just again. 1% interest rate hike in one shot would be like the highest interest rate hike ever in the United States in one shot. I don't know if we've ever raised interest rates hikes high that ever. And this is very possible because Europe just announced a massive 75 basis point hike here just about a week ago, less than a week ago, 0.75%. So anytime you see 75 basis points, that means 0.75. So 0.75%. Europe just raised it. So really, these are going on here everywhere around the world. In fact, I think Canada just did as well. Yeah, Canada as well. Bank of Canada hiked its interest rates again in a Wednesday in an attempt to rein in runaway inflation, and signaled it would likely need to raise its interest rates even further. It's tough news for financially strapped Canadians already struggling under spiraling inflation, wages that aren't keeping up, and credit card debt. See, this raises your credit cards interest rates, your home mortgages, if they're not on a fixed rate. Any new home buyers will have to, new home mortgages are nearing 7%. If they raise interest rate a whole 1%, they could be getting close to 8% after this rate. New car loans, sky high at this point. This has already sent new home mortgages, new home buyers closing on homes to a 22-year low. So we went from a red hot um, home buyers and real estate industry to a 22-year low of home closings. That's how much interest rates has affected our country already, and they're going to keep raising interest rates. So we're basically, I think we've already confirmed that we're already in a recession, but now we could be going into a deep, deep recession. Um, it's kind of hard here because and countries all around the world are doing this. It's not just the US. It's kind of what they have to do to combat inflation. If they do nothing, inflation will stay high for who knows how long. And you can see this because home prices are coming down dramatically. Car prices are coming down dramatically because people aren't buying. So instead of that $300,000 home, with 20 different bidders bidding on it the first day, multiple bidders saying, "I'll bid 325, I'll bid 350, I'll bid 355," and multiple bidders, in a bidding war. Now they're lucky to get one bidder at 290, okay, because of interest rates. Interest rates are sky high. So now that same house these sky high interest. I mean, we went from interest rates below 3% on homes to now 7%, and maybe now even we're going to be getting near 8%. I mean, the payments on those are dramatically higher. I mean, check this out. Okay, so this is I just Googled home mortgage calculator here. On a 30-year fixed, the default interest rate it put it in was 6.94%, basically 7%. So Google already knows that's kind of the default interest rate now on a $300,000 home. Okay, but we used to be able to get interest rates for 3% or less. So look at the monthly payment here. Just we'll round and say this is 2,000 for a $300,000 home. In some places, you can't buy a home for $300,000. You can buy a shoebox for that, right? You go to New York, California, San Francisco. Some places it's not even possible to buy a home for that price. In some places you can. Some places like Ohio, Texas, you can get a good house for that price. Some places it's not possible. But let's change this interest rate here to 3%. Look at the difference here. Ready? Look at that. It went from 2,000 to 1,265. That's a difference of $700 a month for the exact same property, guys. For the exact same property. Okay? That's a massive, massive difference. We look at that here, $700 a month times 12 months, that's an $8,400 a year difference just in interest for the exact same home. You look at that times 20 years, that's $168,000 in interest that you're paying. Now, of course, my advice would be, or anybody's advice would be, refinance when the interest comes down here in a few years. But you can see here that's a big difference. Now, what if you're in a high cost of living state where homes are 600,000? Okay, and we'll go back to that 7% interest. The mortgage payment's $4,000 a month. And again, if that's just what homes cost, you have no other choice. Well, you go from a $4,000 payment, that home, when the interest rates were 3%, you go from 4,000 to 2,500. That's a $1,500 a month payment difference just because of interest rates. But again, the Fed had to do this. Countries all around the world are doing this. European Union's doing this, which is dozens and dozens of countries. Canada's doing this. I mean, everybody's doing this because they have to bring down inflation. Inflation's everywhere. It's not just in the US. So, and that's why I like to show you this stuff on the screen. But look at that. That's a $1,500 a month difference. $1,500 a month times 12, that's $18,000 a year more in interest. And the same thing is happening to car payments. The same thing is happening on credit card debt. Your credit card interest rates are going up. The same thing is happening on anything that you pay interest on that's not fixed. If your interest rate is not locked in, you're paying more. And by the way, credit card interest rates are not locked in. They're variable. They can go up at any given time, and they've probably already gone up if you're not like watching what you pay on your interest rates. And will we see more announced for the US? More help announced for the US? Well, Canada just announced a inflation relief package for low earners. Canada Prime Minister just announced a $4.5 billion Canadian package. Remember, they have a lot less population there. In measures on Tuesday intended to provide relief for high inflation to low income families. Includes doubling a quarterly tax credit sent to individuals and families with low and modest incomes to offset sales tax and a $500 one-time top-up to housing benefit that is provided to low earners who need help with rent. So $500 and a doubling a quarterly tax credit and $500. And the Trudeau's Liberal government will also provide up to $650 per year for dental care to children under 12 who do not have access to dental insurance. Same quote, these things will make a difference in people's lives right now, but they are also sufficiently targeted that we are confident that they will not contribute to increased inflation. By the way, Canada's inflation is at 8.1%. Our inflation just came out at 8.3%. So pretty much very, very close. It's at their highest level in 14 years last week. So again, we're seeing this kind of stuff all around the world. So what will the U.S. do? Will we see more from the U.S.? We have a new massive food SNAP conference coming here in about 2 weeks. Will that provide massive new benefits to over 40 million Americans on that? And we have over 31 states providing massive checks, inflation relief, tax benefits, tax refunds, and property tax refunds as well on that as well. Remember that on September 21st is going to be this massive meeting from the Fed where we could see a massive interest rate hike here yet again. Will we see something from the government in relation to inflation relief as well, with coinciding with something like this? Will we see a massive interest rate hike from the Fed? I'll keep you up to date. So make sure to subscribe to our YouTube channel down below. It's completely free to do so. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. Click the bell icon down below when subscribing. It's completely free to do so. This way you won't miss out on new videos. You can click here to watch my new video about executive orders for stimulus. Really good video here about that. And here is the new video about a big announcement for Social Security and Americans as well that just came out. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.